Good morning to everybody. My task is to focus a little bit on the regulatory framework of the European Monetary Union and to put the question, is there some more need for reform? And we heard something about that. Let me start with a short view back to what we had in the European Union, in the European Monetary Union on budgetary policy, defined as the Maastricht Treaty on the one hand and the Stability and Growth Pact on the other hand. And you can see that, in fact, we were not very successful. The criteria of convergence, not fulfilled. The permanent monitoring has proved ineffective, and the no bailout rule has been broken by the credit provision of the European countries to Greece in May last year. But what is more important, and it's struggling for the economists as a politician as well, is that our expectation that the markets will react if a country will not in line with the criteria of the Maastricht Treaty and the criteria of Stability and Growth Pact, that this expectation was not what we saw. And some behind that may be the discussion in 2003 from the German government in line with the French government when they forced the European Commission not to proceed with the sanctions against sanctions towards Germany and France in line with the budget outlooks, which were remarkable from several years behind the 3% ratio of annual deficit. And as you know, the European Court of Justice in 2004 said, yes, it was a failure, a mistake of the German Commission, but now we have the outcome, the impact in the last year's decision that the markets, and not only in the last year, in the years after 2003, after 2004, that the market not really were on the line with the bailout regulation of the European treaty. So, and what we saw in Greece was the outcome that, in the one hand, the international debt of the Greek government was more or less stable until the Greeks joined the European Monetary Union in 2001, and the risk premium came down, but then, more or less, the ongoing increase of the debt of the Greek state on international markets was not in line with the risk premium. The risk premium, the spread between the German and the Greek and the German treasuries were very low until autumn 2009. So we saw that the expectations we had 10 or 15 years ago was not fulfilled, and we have to put on the table what should be the answer and reform the regulatory framework. One other lesson we have to learn is that, as related to what we call the Dutch disease. Maybe you've heard of it in economics. We discussed this Dutch disease in the 70s when Netherlands was able to start the exploration of the North Sea oil, and they had the question to answer, what should they do with the income, the unexpected income? And they increase the welfare state, they expand the welfare state, and broaden the basis for private consumption. And that's a lesson we have to learn also for Europe, that it's the same. When a country with a high inflation performance in the past joined this European Monetary Union, will have the same impact. They have a lower interest rate, they have more disposable income. The question is what to do with this disposable income. And we observe a misallocation of capital, especially in Spain, especially in Ireland, as we heard before. So the risk premium rise since the autumn 2009, and you see in this figure, in this chart here, the history of the last year, on the more or less on the political discussions. The peak in May, then the European Council was forced to introduce the European stabilization mechanism, and a little bit was able to calm down the markets, but once again in autumn, in line with the discussion on Ireland, the risk premium rise again. So what's about the regulatory answers we found just now? The European Financial Stability Facility is a mix-up of some advantages and some disadvantages in reorganizing Europe, the European Monetary Union. It is in line with Article 122 of the Maastricht of the European Treaty, which offers the possibility of help to some others if there is a special load, a heavy load for some countries. What is most important for us, in my point of view, is the combination with the IMF. because combining the European assistance with the IMF makes quite clear that it's not like a party to join this European financial stability facility. It's a hard way to go. And the question is there any alternative for starting restructuring in Greece, restructuring in Spain and Portugal and Ireland? And I think, no, it was only the combination of these European assistance and the IMF. In December last year, the European Council decided about the European Stability Mechanism for the future, which will start in 2013. And if you're looking on that, and we heard something about this new construction, I think it's very important that we will have at least 2 points on the table which are important. First is, yes, we need a regulatory framework for help also in the future, and we need such an offer of help that is very uncomfortable. So also here it's okay to join to combine the European assistance with the IMF. The second point is we need an involvement of private creditors in restructuring of public debt, what is combined to the collective action clauses and the insolvency process. But some other points are even important, and we have to discuss on that. The first is, I think all European member countries, all member countries of the European Monetary Union need a national debt brake. The national debt brake, which was first introduced in Switzerland in the beginning of the last decade, and which came the German constitution in 2009, and it was in fact a basis for the budgetary procedure for Austria since 2010. And such a national debt brake is also an answer to the crisis on the financial markets in 2008, because it's a final farewell to Keynesian politics during a normal business cycle. The impact of the crisis of the big economic, the world financial market and economic crisis is to say that Keynes has to be reoriented as an answer to a big crisis, to a deep crisis, to a spontaneous and systemic disorder. But it's not an instrument for the normal business cycle. And the fourth point, European Stabilization Mission, involvement of private creditors, national debt brake. The fourth point is, what should be an idea of a more European perspective of fiscal policy? I think a transfer union is a non-starter, especially from the German perspective, but there's an idea for Europeization of some policy areas with very high spillover effects, infrastructure and defense. Why not define these policy areas as European ones? Why do we not start to finance these special fields of politics with high spillover effects? So from an economic point of view, they have a sound basis for that, to finance this in the European order. The debt brake in Germany, only some information on that. In 2016, we have the relation that the federal budget has only a structural deficit of 0.345% of GDP. Into the end of the decade, all German Länder has to reach a balanced budget, and we are still on the way. We have it in the German constitution, all the German Länder have to put it in their special constitution. And to look back to the past and to make clear if it is possible to consolidate on the one hand and to have a strong growth on the other hand, here's the comparison of the 80s when we had a similar situation in Germany with a high deficit in the beginning of the decade, with a weak growth and high inflation. And we had to reduce in the 80s the annual deficit ratio by 0.5 percentage points. And nearly the same we have to do in this decade to the end of 2020. So I think we should be more optimistic on these possibilities of budget consolidation and on the non-Keynesian effects of consolidation, which came from the effect that we have a new credibility of the sustainability of public finance in the medium term. And let me add one remark on the German recovery last year, because we heard something about the idea of more spending in Germany as an engine for Europe. As you've heard, last year the GDP in the average of the year had a growth in Germany of 3.6%. It's the highest growth since German unification. 2.5 percentage points of these 3.6 came from domestic demand. So there is still a remarkable domestic recovery of the inside Germany in private consumption and in private investment, which started in the second quarter of 2010. And my headline for 2011 for the German economy is a renaissance of the private consumption. Thank you so far.